Hi everyone, welcome back to our channel.
Hope you have a wonderful day. In today's video, we're actually going to answer a question from one of the comments that we received in our video. So in the previous videos, or one of our previous videos, we talk about how we go about, earning our passive income on our first investment property.
Yeah.
So we use vendor finance is a method for us to use in order for us to achieve positive cash flow property. So the comment goes, I didn't think we did vendor finance in Australia. How did you go about finding buyer willing to do that?
So I assume you understand what's vendor finance. So
If
for
you don't,
people don't understand what's vendor finance, it's just so we are the legal owner of the property. So we bought it traditionally. We went through the bank, get the mortgage, the house under our name in the paper, but it's still fully owned by the bank. And then we on sale to someone else, but we finance them with a high interest rate. So the difference of the interest is where we make money.
Yeah. So traditionally, you buy, you rent it out, and hopefully the rent will cover the mortgage repayment as well as the expenses on the property. We found that particular technique doesn't really do well when it comes to, in metropolitan area, and majority of metro, it's bound to be negatively gearing.
Yes.
Where the money will be out of pocket more compared to it's coming in.
But we'll have a greater capital growth.
So how do we go finding who's willing to do that? I'm not sure. I found
how did you do it?
How did I do it? Well, I did a few different ways of in order for me to achieve this particular transaction. I did back in the days. We didn't have enough budget.
No.
So I put an ad on Facebook Marketplace, Gumtree, even in realestate.com.au, like for sale by owner type of advertisement, and write down, here is the condition of the property, here is how it works. If you explain it to them, here's the house, this is what the requirement is, you'd be amazed how many people that actually willing to do it.
Oh, well, but what I'm amazed was how many people don't understand how this mortgage works.
Correct.
I'm paying all this, so that means in 5 years I'll be done.
Yeah.
Funny.
So there are a lot of education that I have to go through with a lot of inquiries, and I realized if they don't understand this, then there's no point of me going any further.
Yeah.
But yeah,
for this house, the first one we had low budget, and then you got a very old traditional way of doing so.
Yeah, I did letterbox drops.
Not letterbox, but then how the buyer saw it is from the side.
No, it's actually from an advertisement. It was an email conversation. Goes, hey, you've got this property. Can I have a look at it? They had a look at it. I think it's like, I don't know, about 10 within like an hour or something. Where's the paperwork? I didn't have to explain. They understand and what the condition was. And
I think in Australia there are not a lot of people understanding about vendor finance, and actually there are a market of buyers. They are looking for it.
Yeah. For whatever reason, my particular buyer, they didn't want to go to the mortgage, to the bank for whatever reason.
Well, not mainly is divorce.
Yep.
Right? You gotta pay child support, you don't have borrowing power. Second is business owner. Only on paper, the income is not as great.
Yep.
And then third is age.
For whatever reason, they weren't unable to go traditionally to go to the bank as borrowing money from them. Correct. So we on the other hand, it's like, well, we can borrow the money, but we don't want the property.
Yeah. And we just want to make extra money from it.
Exactly. For us, it's like, okay, then, well, I know how much my mortgage repayment, let's say, whatever it was. Well, if you want to piggyback on me, here are the fees involved. and that was.
And we're always upfront. We'll tell them, okay, if you, let's say, this is your weekly repayment, we normally get them to pay principal and interest.
Yep.
Don't want to dive down too much, but we want them to pay down the mortgage as well, because we don't want to carry too much risk, just like the bank.
Yeah.
And then we'll tell them how much is the council, the water, maintenance, insurance, you have to pay for it.
Yep.
So for us, we would just get them to pay us and we distribute the money.
Yeah. So effectively, we become sort of like the property
Agent,
manager in a sense, because we actually have to on pass those, I guess the bills, I say, because yes, it is still under our name, but we don't really take care of them, but we just pass.
We have to make sure those bills are paid.
It still have to be paid.
It is our name.
Correct.
And let's assume the buyer, we have all these legal contract and saying, so how much, like how often you have to pay, if you're late, how much you will be charged.
Yep.
And also how many days, if you didn't pay on time, then it will be foreclosure.
There's penalty, just like the bank, there are penalties involved. There are procedures in case if anything happened.
Yeah.
At the same time, it's a win-win. I created a win-win scenario. So it's a win for the buyer. Listen, we agreed at this price. For instance, for this particular one was $500,000. Yeah. Property value now it's roughly about 600 odd. Yeah. $700,000 or so. Now, if they were to sell this property, then they pocket whatever's on top of the 500.
Correct.
So, and we don't chase whatever's on top of that.
No, because that's how we want to sell it.
Correct.
We agree we capped at $500,000.
Yeah.
Yes, we lose out on that holding or capital gain, but we were struggling at that time.
It's a win-win situation. Like now we're becoming, like this particular client anyway, we're becoming friends. They can talk to us, they want to buy another property and another one. They ended up buying like multiple properties with us. And we keep on asking them, do you ever want to refinance? Because I don't want to be in debt anymore with the bank, but we didn't put a clause of how you have to refinance between a certain number of years. We probably would do that in the near future if we ever do the same thing.
Apparently, in general, they refinance between 4 to 7 years.
Correct. So it's been 7 years with us.
Oh, not 7, or maybe 5. 5
years. Okay.
With these. That's the first ever vendor finance property we've done.
Yeah, and so far, I guess we're sort of maybe lucky because they can contact us anytime.
Yeah, we trust them. I think it's all through trust.
Yeah.
If you have a sense that you cannot trust that person, just don't go through the deal.
Correct. So again, it's about relationship and building, I guess, a win-win scenario for us. We didn't want to burn any bridges because they help us. At one stage, we were a bit under.
Oh, of course, they didn't know that.
So,
and they have to trust us too, because we are paying our mortgage to the bank every week as well.
Correct.
Otherwise, if they're paying us and then we're not paying the bank and foreclosure, what happened?
That's it.
But of course, they still protected because they have the legal paperwork saying we've vendor finance to them. So the bank, let's say, touch wood, we didn't pay, and then the bank still can sell it. Maybe sell directly to them, I don't know, but can sell it and whatever difference and pay them as well.
That's it. So as a whole, like that works for us, it might not work for you.
Yeah.
So far it was a good learning curve. Luckily, that's just one way of finding positively good cash flow when it comes to property. Would you do it again? If you were to do it all over again, would you do it again?
I don't know, it's very hard to say. It may or may not be. Depends on what I need. If I need cash flow, yes. But if I can hold it, maybe I want a capital gain. I don't know. But the traditional rent is just not good enough.
Yeah. Because what was it? I think the repayment was $350. That's just only mortgage repayment. Yeah. And then the rental income was 300 something. There was 20. A gap.
Yeah.
There's a gap of like $20 or $30 just on
mortgage. The rent can't even cover the mortgage, let alone the council, the water.
Yep.
The insurance, the agent fee.
So there's yeah, I mean, that was where we were, and realizing that didn't work for us,
No.
and we got to find a different way.
Correct.
So far, we went through, I don't know how many properties that we went vendor finance now.
5?
5, yeah.
Yeah.
So that works for us, and overall, it has been I guess, a good thing. Like it works out so far.
Yeah, but you will be amazed that the buyer, they are quite well off, I'd say.
Yeah, I was
You'll
quite
be
amazed.
amazed.
You'll be amazed the type of people that you meet while you're doing this transaction. One of them
They
is
are
like
business. Two of them business
few,
owners.
like a few
Yeah.
of our clients, like they're all business owners. They earn way more than we do. And
Yeah.
I'm like, oh, okay. And then some of them is like international buyer as well.
Yeah.
So with the international buyer, they live internationally. That is, they fly in and fly out, and they have 2 businesses in 2 different countries. And just so happen one of the country, they do a lot of vendor finance. It's in the US, and I was amazed. Like, okay, he understands it. He knows what the drill is, and yeah, so far, pretty good.
Yeah.
And once you get to know one, they will come back to you and ask for another and ask for another.
Yeah.
In fact, it's the other way around. Now it's like, we need more houses because all of our clients asking, have you got another
More.
one?
Yeah.
And just so happened we haven't purchased another house since then.
Yeah, not yet.
Anyway, that's just our, I guess, little experience, guys. I guess answering you guys your questions when it comes how do we go finding them. There are bound to be people out there who wanted to do the vendor finance.
Yes.
Because for whatever reason they are not unable to borrow from the bank.
Yeah, that's right.
If you like this type of content, don't forget to subscribe, comment.
See you next time.
Bye.